Good morning. Good morning once again. I know I had greeted some of you, but we were waiting for other participants to join. My name is Lesego Mashego, and I'm going to be the MC for the session today. Welcome, esteemed guests. It is my pleasure to welcome you all to the FinScope MSME South Africa 2024 results launch, where we will highlight. Please make sure that you highlight the word highlight. We're only highlighting some of the findings from the survey. I'm placing an emphasis on highlight because there's more from that data. And if you are looking for more, you can reach out to our teams to make sure that they provide you with more. So today we'll just be highlighting what we found from the survey. And we also want you to use these results not only as you just viewing results, but to spark conversations within the MSME ecosystem. Today is not only about the results, but this also serves as an opportunity for ecosystem players to unpack what it is that they can do individually, collectively, to support the MSME sector in South Africa. We have an exciting lineup of activities or sessions that we will cover. In terms of the agenda, we will focus on presentation of the FinScope MSME South Africa 2024 results, which will be done by Abel Mutsumi. Abel is a FinMA Trust employee, and he works in this. He's a senior data and analytics specialist. This will be followed by a keynote address from Ms. Musa Makele, DDG Sector Policy and Research from the Department of Small Business Development. And then we'll give you an opportunity to ask some questions and react to the results that would have been presented by Abel. And this will be done through a Q&A function, but the team on this side will then answer those questions. We'll identify a few that are interesting and answer them. We'll then move on to a panel discussion. That panel discussion will be moderated by Obed Maposa. Obed Maposa is a senior data and analytics specialist at FinMA Trust, and he will introduce his panel members, who are Mr. Elroy Dirks, Nontobeko, Lubisi, as well as Dr. Padi Lehotla. In terms of the discussion that they will hold, it will be premised on the data and challenges faced by MSMEs, both formal and informal, their ability to be a key driver of reducing unemployment, and their contribution to the economy and the future of the MSME sector. We will then move on to wrap up and close the session, and that will be done by Ms. Phumelele Ngobo, who is a specialist in program development and implementation at FinMA Trust. I'm now going to hand over to Mr. Mutsumi to take us through the results. Like I said, they are highlights. You can ask questions. We may not be able to answer them, but those particular questions will then be covered by the different team members that are in the different rooms that will then try and resolve some of your questions. Some of them, we will address them during the early reactions session that we have allocated. Please note that everybody is muted. You will not be able to pose your questions via voice, but the chat function has been enabled for you to be able to ask the questions that you have. Please also note that all the presentations that we have will be shared with you. So every presentation, as well as the video from this particular session, will be shared with you so that you can peruse it further and also share it with any other stakeholders that could not participate in the session. Ndate Mutsumi, over to you.
Good morning, everyone. I hope you can hear me clearly. My name is Abel Mutsumi. I am in the data team at FinMA Trust. Today I'll be sharing the just a brief highlight on the FinScope MSME results for South Africa 2024. Without spending too much time, I think it's always important to give context of why we do the survey. We are in the business of financial inclusion, and part of that inclusion means we need to look at how MSMEs can assist people to get financially included, meaning how can they escape poverty, and access to employment is one of those. So the National Development Plan for South Africa 2030 has estimated that MSMEs need to contribute around 9.9 million jobs that will be, assisting the unemployed. So part of that is that there's a lack of data to understand and unpack the MSME sector as a whole. But beyond that, the question always is, how do we help and assist the MSMEs overcome their challenges? How do we assist them to grow? How do we assist them to employ more people, right? By creating that an inclusive society. So this is what this data seeks to achieve. But beyond that, FinMA Trust is a data-led, evidence-based institution. So we assist the policymakers, the regulators, the financial service providers using the data to create innovative solutions that are appropriate to sustain the MSMEs, right? Without spending too much time, I'll get through the overview of my presentation today. First off, I will be looking at the objectives and the background, and the methodology, size and scope of the MSME sector. We'll look at the MSME sector attributes, but much more important is to articulate and talk about some of the hurdles and the challenges that the MSME sector is faced with. But beyond that, we will then give a snapshot on the financial inclusion indicators results. As we had in the introduction, we have National Treasury as part of the panel. They are in charge of National Financial Inclusion Strategy for South Africa. So this data then adds to some of those aspects. Why do we do the MSME survey? Like I said, there is lack of data to really articulate recent data, to articulate how big the size of the MSME sector is. But much more important, articulating what is the makeup of the sector. How many micros, how many small, how many medium businesses? All of those are important, but much more important, the FinScope survey is starting to set a gold standard or a benchmark in terms of financial inclusion data, but much more important as well, consistency in articulating the MSME sector as a whole. Like I said, it's also used to track the results of what the ambition South Africa has set itself as part of the ambitions for financial inclusion. And included in there is to assist the financial service providers to create innovative product solutions for the MSME sector. Right? So when it comes to MSME, most of the ways that are spoken is credit. But with this data, we're able to show that there is much more to the MSME sector than just credit. Right? We'll look at some of those slides that we'll talk about. The financial services that are available. The first question that everybody will always ask is the methodology. How do you do what you did? So the target population is 16 years and older, and these people have to see themselves as business owners. That's a very important criteria, that they need to be able to derive or get paid, get some income from this MSMEs, right? So what that does, that bullet point then filters out some of the survivalistic businesses. So please note, even though we don't record them in the MSME sector, it does not mean we don't account for them. The annual FinScope consumer survey is enough data to articulate and actually paint a picture of who the survivalistic businesses are and all of those things, right? So for the MSME sector, we are looking at the higher notch of the MSMEs. The other important aspect is with regards to the definition. We use the definition of to define MSMEs using the number of employees, where micro is 0 to 10, small is 11 to 50, and medium is 51 to 250, right? So those definitions vary in terms of turnover, they vary depending on sector, but the data is able to articulate and give you that level of depth. In terms of how we actually collect the data, we employ a multi-stage sampling process. where we first look at the enumeration areas. We covered 300 in this 2024 round. We also touched on businesses, standing businesses, and households, because the reality is MSMEs don't only exist in the brick and mortar enterprises, right? There are some where a man.
The presentation's faded. So let me just sorry, Abel. Sorry, just that you.
Apologies, colleagues. We're just having technical issues. We're trying to make sure that you can see the presentation. We picked up that you're not able to see it. We will share it and you'll be able to see it as Abel speaks. Please give us 2 minutes so that we can fix our technology.
Thank you, everyone. I understand now you are able to see the presentation. I was still on the methodology. Just to recap on the methodology side, we have covered 4,027 face-to-face interviews. And we also used the key section, right? So please note the advantage with our methodology is that we are not reliant on a database. So all the MSMEs that exist are, we are able to find them whether through standing businesses or through households. That is one of the aspects that give us the ability for our methodology to cover both formal and informal businesses. On the next slide, this shows that we have covered the length and breadth of South Africa. So those that unutilized data, we'll start appreciating the fact that the advantage with FinScope survey, we are able to apply geospatial analysis as well, using the 2020 data and the 2024 to actually really highlight the location and the presence of the MSMEs, right? that is still valuable kind of data, because in this day and age, a lot of MSMEs are competing on the ability to analyze and utilize data to inform their product design. In terms of the sample allocation, out of the 300 enumeration areas we visited, a majority of those are located in the urban spaces, but because we want the data to be generalizable and the inference to cover national, we had to also include the rural population as well. The question is, how big is the size of the MSME sector in South Africa? As of 2024, we have found that there is 3 million odd business owners who own 3.9 million businesses. Some of those own more than one business, right? And the sector as a whole employs around 13.4 million, with an estimated turnover of 5.29 trillion. These are some of the aspects and the changes that we have seen in the MSME sector. In terms of how it compares to 2020, we have noted that on the MSME owner side, there's an increase of 15.7% from 2.6 million, and on the number of employment, it moved from 12.9 million in 2020 to 13.4, right? So these are some of the indicators that actually show you the potential the MSME holds in terms of employing the unemployed, right? Addressing some of the challenges that South Africa faces. So compared to that as well, in 2020, we had 3.1 trillion. And now the sector country has increased in turnover to 5.29. What is clear, therefore, is the role the sector plays, right? Like I said, the NDP anticipates that the MSME sector actually holds the key to solving a lot of the South African problems, right? Unemployment being one of them. As it stands in 2024, the sector currently employs around 80% of the labor force out of the 17 odd million, and the formal businesses contribute 3 trillion, informal businesses as well 2.3 trillion, with township businesses 2.4. This then justifies some of the voices that have been coming out from different quarters in terms of finding solutions for the township economy. So FinScope, for example, we recently presented a community digitization project that looks at how do we digitize the community setup, right? So the question therefore is, how then do we ensure that the 2.4 trillion circulates within the township environment before it leaving out the township? So part of the currency reticulation is an important feature. In terms of the business ownership rate, in 2024, we have noted that around 6.77% of the business, that's the number of businesses out of the adult population. When you look at some of the data points, for example, the GEM report in 2021-2022 that did a similar thing, you can see that the sector actually is growing, and the number of entrepreneurs participating in the sector is growing from 5.2 in 2021 to 7% now in 2024. But looking at some of the comparable countries around the world, part of the BRICS, for example, in Brazil, we see that the business ownership rate is around 10%, and in India, it's around 8.5%. So that tells you that at least to some point, South Africa actually is faring well, or on average, in terms of its country peers. How big is the sector? As it stands, 84% of the sector is micro enterprises. That's around 2.5 million businesses. For MSME, small businesses that account for 14%, that's roughly 422,000 businesses, and medium businesses is around 60,000. Please note the data is therefore able to go granular and also articulate that 27% of the MSMEs actually do not have employees, and of those, 82% of them are informal. So these are some of the nuances that FinScope will then also be looking at, and some of the initiatives we'll be looking at in terms of how do we provide some kind of support to formalize these businesses. In terms of the sector lens, we have noted that around 1.6 million businesses are from the service sector, and that sector employs 5.1 million people. The trade is 700,000 odd businesses that employs 2.7 million people, and the industry sector, that's 500,000, that employs 4.8. So with the agriculture employing 1.1 million, and that's 200,000 out of them. So in terms of which sector holds the higher potential to contribute to solving the unemployment rate, industry, for example, it means that for every one new industry business, it has a higher chance of employing 9.6 new job opportunities. So these are some of the data points that actually start influencing policy making and informing government where to actually channel some of the resources, right? The bigger question always is the access to markets. Because for the survival of the MSMEs, they are dependent on their ability to continuously going concern, right? 82% of the MSME customers are private or working customers. It was encouraging to see that 34% of the MSMEs actually doing business with larger businesses, right? So these are some of the attributes that actually help their survival. With 26% of the MSMEs doing business with government. In terms of how do customers reach their MSME businesses, we have noted that 91% of the MSMEs actually rely on working customers. Right? Similarly, it's also encouraging to know that 36% of the MSMEs actually work on contractual arrangements. We have noted that 42% are actually using digital means to be reached. So 42% of the MSMEs are reached by customers through digital means, and 37% are using online. 77% are using word of mouth or word of referrals. In terms of the MSME sector as a whole, it's also important to articulate how many of these MSMEs are actually doing business with government, right? So the first question asked is, how many of these MSMEs are in the CSD, Central Supply Database? As it stands in 2024, that are 25% of the MSMEs, and 20% of them have therefore then submitted tenders, and only 53% of them were successful. It begs the two burning questions. One, how can we assist the MSMEs to actually be part and participate or part of the CSD, right? That's number one. Number two, how can we increase this volume from 25% to say around 50%, so that more and more businesses are eligible to do business with government? The first answer is a lot of the requirements for CSD, for example, requires that MSMEs are formalized. So what does the data show us in terms of formalization? In 2024, we have noted that around 837 small businesses are actually formal. Formal defined as MSMEs that have registered with CIPC and SARS. That is around 48,000 increase from 2020. And this is a worrying figure, right? We have seen that MSMEs have increased around 400,000, but we've noted that only around 10% therefore been formalized. So these are some of the worrying features. So it means, in principle, the sector is actually growing, but the number that is more growing is the informal businesses. And those informal businesses in 2024 account to 1.7 million, and township businesses around 1.3 million businesses. With rural MSMEs being around 429,000. So in terms of looking at the strand level or in percentages, it means in 2024, 28% of the MSMEs were formal. We also do take note of the MSMEs that are semi-formal, that have registered with the likes of municipal databases like a liquor and taverns, right, a saloon. So they have formalized, but not necessarily with CIPC or SARS. So we denote them as semi-formal. So for the purpose of this analysis, we have therefore then deemed as semi-formal as informal, right? So then we differentiate between 28% that are formal and the 72% that are informal. Still understanding why barriers exist in formalizing the businesses. As you can see on the graph on the left, it shows that around 27% of the business owners have noted that they are just complying for the sake of complying, and 8% are, they formalize their businesses for the sake of avoiding fines. So generally, when we recategorize all of those numbers, we have noted that 27% of the MSMEs are doing this for compliance purposes, and 28% of the MSMEs do not necessarily see benefits, right? Including the 14% and the donors. And there's the 26% that are doing this to avoid bribes. So then this begs the question of, do MSME owners actually understand the justification on the incentives to formalize? So it means there's a lot of work cut out for the policymakers and for the institutions like SARS and DSBD, right? In terms of how do we move and formalize the MSMEs. So these are some of the worrying numbers that we have seen in the MSME survey. Similarly, of those that are informal, the question was asked, why don't you want to formalize, right? The graph on the right shows that 21% of the business owners have noted that the business is too small for them to justify the need to formalize. Whereas there are those that have tried but did not succeed, that's the 13%, and the 15% that looked at it's too complicated. So obviously, in the process for us to formalize this MSME, some of these barriers and understanding we need to go through and create some kind of financial education, the benefits of registering with the business owners, right? On the next slide, the data is able to give you the business age. In 2024, 27% of the businesses were in a startup phase, that's 0 to 2 years, and 35% were on the growth phase, that's 3 to 5, and 25% were in established 6 to 10, and 13% were more than 10 years old. What was then interesting was to look at the numbers by formal and informal. What then, the graph on the right, what then some of the numbers starting to show us was that actually a lot of the informal businesses were on the startup and growth phase. So basically they're less than 5 years. That's around 66%. Right? So in the process of understanding why MSMEs have not formalized as well, age is one of those aspects as well. Right? For the formal businesses, it can be noted that more of them are on the mature and established phase. We then look at how do MSMEs, how can they pivot and take advantage of and to digitalize, right? So included in there, you do need some of the tools. For example, you need access to a mobile phone or phones and internet access. What was interesting for us was the two data points, the 90% that have access to a cell phone and the 28% that have access to a speed point, right? This is encouraging as well because this number has increased from the 2020 survey. This is encouraging because in terms of us trying to find solutions to digitize the payment systems, we have noted that more and more of these MSMEs are actually taking up the speed points. On the other side, part of the digitalization is how do you digitize the record keeping? What we have noted in 2024 is that 59% of the business actually keep business records, but only 26% of those are using computerized, whereas the majority of them are still using manual systems. And also the worrying part is the 19% of the MSMEs that are still keeping records in their head. So should they then need to approach institutions that need access to finance, they are not able to then articulate and show business performance. While on that as well, it's also important to zoom in a bit in terms of the behavior. Who is doing it and how are they doing it? In terms of those that are using the computerized system, we have noted that they are using packages like Pastel, some are using the likes of Cashew and QuickBooks, right? Which is encouraging because at the end of the day, access to information about the business performance is one of those criteria that's important for this business to be fully set. But on the right side, we also see that the MSME is also a part-time bookkeeper, who is also a part-time sales manager, who is also a part-time operations manager. These are some of the issues that are holding back the progress and the ability for MSMEs to actually grow and scale, right? Still on the digitization aspect, what we want to show is that the data, FinScope data is quite comprehensive. For instance, we actually start looking at issues around cryptocurrency. And in 2024, MSMEs, 13% of the MSMEs are actually using cryptocurrency. So this is some of the aspects that tell you, that give you some kind of indication where the MSME, the trajectory of the sector is going, right? However, in terms of asking them directly, what are they doing? What kind of changes are they seeing in their businesses to actually thrive in the latest data age and information age? 55% of the business owners have reported that they actually do nothing. Whereas the 12% are actually digitizing their payments, and some of them are digitizing their processes, like including bookkeeping. So we then have created an indicator called digital literacy of the MSME owners. This is the ability and the capability of the MSME owner to actually digitize, right? So in 2024, 89% of the business owners can be deemed as digitally literate. So that means this is some of the behaviors they've done. 79% of them have managed financial services through DFS, for example, and 56% are using digital channels to reach new clients. There is a growing economy that is also seen. There is an institution, I know I will not name names, that have actually procured a solar backup, and have acquired 2 laptops and rewards programs. So this then shows you the ability and the aspects and the opportunities that the reward programs actually serve the MSME in terms of managing their expenses. Right? 67% of the MSMEs have actually used the reward programs for the benefit of the business. And this is led mostly by Pick n Pay and Shoprite Checkers, 22% and 20% respectively. In terms of the data as well, the data is able to articulate the level of export abilities and import abilities of the MSMEs. In 2024, 11% of the MSMEs were exporting, but mostly the destinations were around the SADC area. And similarly, those that are importing the 5%, they were importing mostly from the neighboring countries as well. The data is therefore also comprehensive enough to look at the different types of financing instruments. So the issue around access to finance should not only be centered around credit, right? Only credit. So we now show that there's actually movement and different ways that MSME owners are actually managing the access to capital, right? Issues around crowdfunding, equity, utilizing venture capital, private equity, all of these things. So what the data shows us that, for example, in asset-based finance, 10% of the business owners are aware, but 17% have used. So collectively, 27% of the MSME owners are aware of asset-based finance. So this is some of those opportunities that the different financial instruments can assist the MSMEs. In terms of segmentations, as we said in the beginning, the data is able to be segmented in detail, right? For instance, we then zoomed in at the level of MSME owners that have disabilities. In 2020, 9% of the MSME owners, that's around 270 odd thousand MSME owners, are owners with disability. And they are mostly men, they are mostly in the urban areas, and they are mostly in Gauteng. We also then had to zoom in a bit on the business support. Where do MSMEs get business support? 55% of the business owners said that they are aware of at least one institution or organization that offers MSME advice or as some kind of financial assistance. And of those, 20% of them have utilized the support. And this is worrying, right? Why are they not taking advantage? So what the data has shown us that is because most of these businesses are informal. So the requirements, for example, that you do need a bank account, you need to be registered, and all of those things are limiting aspects that prohibit MSME to take advantage of these lifeline organizations. In terms of what kind of support was received, 14% have noted that they got support on how to access market, and around 10% were assisted on how to obtain loans and finance and operating credit. Which institutions are these? Leading the front is CFA with 21% and SARS with 17%. But in terms of institutions like CFA, please note that some of these numbers are underreported because CFA uses intermediaries to disperse and engage with the MSMEs. What kind of challenges are MSMEs faced at startup phase? Where the data is able to differentiate the challenges, right? One, at startup phase, what's prohibiting them to grow, what's stopping them from scaling, and all of those things. So at startup phase, we have noted that sourcing money is the most mentioned challenge, and 46% have noted that cash flow is the second most mentioned, but access to market and fast competitors, respectively, were noted some of the challenges that MSMEs face. In terms of growing the business and scaling, a lot of MSME owners have reported crime as one of those aspects. And so this is an insurable challenge, right? So then access to insurance then comes into play here. Competition and corruption were noted as some of the leading causes as well. Access to markets and competition, like I said, is 27%, closely following crime and theft with 32%. We have recently heard the president talk about the proverbial lady who started with 350 to start a business, and so that she is then part of the 11% of the business owners that would have started a business with less than 1,000 rands. What the data shows us that actually you need much more than that. For example, 16% of the business owners reported that they needed between 1,000 and 5,000, whereas 13% have noted that they needed between 10,000 to 20,000. Please note, it should be noted that the data is able to differentiate by SIC code or by sector, so that because some of these are informed by which sector you're actually participating in. But the graph on the right actually talks to some of the issues around social capital, right? Where is the source of this money coming from? So we have noted that 9% of the business owners have actually utilized family and friends as a source of capital, and 8% have used inheritance, with 8% on the stokvel payout. We are in the two-pot system now. We have noted that in 2020, 5% of the business owners had cashed out their pension and retirement to actually channel the money into business. So we will be keeping close tabs on those, because that's a question we've added in the consumer survey to keep note of, whether this will have an adverse effect on the access to capital. In terms of financial inclusion, from the 3 million businesses, we have noted that 85% of the MSMEs are financially included, meaning they are utilizing at least one financial device or service, and 15% of the MSMEs are excluded. And of those that are included, 80% of them are banked, and 44% are utilizing other formal non-bank institutions. So on the graph on the right, it shows that actually between the 2020 and 2024, we have noted an 8 percentage point increase from 36% to 44% on the use of other formal non-bank institutions. And then we have noted a 3 percentage point increase on those that are utilizing informal financial devices. We are able to segment the data and differentiate by business size. As we can see on the graph, it shows that the medium and small businesses are fully banked. But however, there are pockets of those that are still utilizing personal accounts for business services. So in 2024, 14% of the medium business owners have reported that they do use some their personal accounts for business purposes. And 15% of the small business are utilizing personal accounts. However, on the micro side, as expected as well, because like we said, they are a startup phase, it's expected that 62% of them are utilizing personal accounts. So there was a journey that we had in terms of advancing financial inclusion back in the day when we had Mzansi accounts. So these were entry-level bank accounts that were able to be utilized to facilitate a faster uptake of banking institution banking products, right? So the question is, can we do a similar program or initiative on the MSME sector? So these are some of the opportunities that we need to look at. In terms of insurance, we have noted that 71% of the businesses have covered the employee business owners with personal risk insurance, and 18% have business insurance, with 22% taking up health insurance. Please note this increase also was spurred a lot by the issues around COVID-19, right? What is the story in terms of digital financial services? We have noted that the MSME sector is still driven a lot by the use of cash. That's 94% are still utilizing cash. A slight decline from 97% in 2020. And those that are using digital financial services has increased from 58% to 79%. And mostly it's P2B, 71%, and B2P, 49%, and B2B, 53%. So these are some of the aspects that we'll be looking at in terms of programs like community digitalization. The data is able to also look at the use of credit. There are 34% of the business owners that have reported that the business is not able to keep up with monthly installments. The 27% that have reported that the business has far more debt, and 21% that have said that the business has skipped more than 2 payments. So then we created an indicator called MSMEs showing signs of indebtedness. And the worrying number now in 2024 is that 58% of these MSMEs are actually showing signs of indebtedness, right? So these are worrying aspects. How are MSMEs coping in terms of load shedding? The data is also able to articulate those 38% of the MSMEs have bought generators, and 20% have bought any battery or some kind of backup. 20% of the MSMEs have reported that they have done nothing. In summary, what we have seen is that the sector is predominantly micro businesses, 84%. But this changes as well. This growth is more spurred by the informal MSMEs. And we are looking at aspects around how do we formalize the MSMEs, because a lot of the initiatives and support that MSMEs actually need to rely and take advantage of are dependent on them being formalized. So institutions like CIFA that are providing direct support to these MSMEs, we have noted that a few of these, about half of the MSME owners, are actually aware of this. But there are pockets of progress that, as we have seen, that the use of GFS has increased actually. So this is what the data can show you. Please note as well, this is just a percentage of the data. However, we are open to engaging with the people and the different industries and players in terms of how they can use the data. Thank you very much. That's my cue.
Thank you, Abel, for those insights. So there were specific things that I was noting, and Abel kept on referring to them. Credit is not the only thing that SMEs need. They need much more, and we need to think about how we create much more for them. The sector is predominantly informal, not necessarily formal, but our programs, I don't know if they are fit for purpose and if they provide them with what they require. So those are just things that you need to ponder on. I'm now going to call on our keynote speaker, Ms. Mosamakele. Ms. Mosamakele is the Deputy Director General of Sector Policy and Research at the Department of Small Business Development in South Africa. In her role, she focuses on developing policies and conducting research to support small businesses and reduce red tape, which is crucial for improving the business environment for small and medium enterprises in the country. Ms. Musa Makene. So I'll clap. You're not gonna hear my clapping, but I'm clapping. Yes, don't look at it.
I won't look at myself. Thank you. Good morning, ladies and gentlemen. I'd like to first acknowledge everybody that's on the platform, that's joining us this morning, all the business forums, the experts, the academia on the platform. Hopefully there's also some private investors there, all the experts that are assisting us in hosting this event. I'd then like to extend my appreciation to our host, who have extended us this invitation to join them on this day as they celebrate the release of this information. It is indeed an achievement in progress in this journey of ours in terms of trying to solicit information or data on small business development. It is still in line with our strategic priorities to stimulate jobs, to have an inclusive economic growth, and also to establish a capable state. Ladies and gentlemen, just to start the conversation, I'd like to reflect on the role of government and why specifically we have been invited and honored this invitation. Is that most in the struggle with developing policy for small business is that you are dealing in an environment where primarily the market is profit driven, and as government, we are policy driven and we are more developmental driven. So in our role, we try by all means to be redistributive, to ease administration and to support social welfare and development. These two roles that we play, they're somewhat contradictory in terms of what we sometimes envisage to achieve. However, we constantly wait to strike the balance between the two in order for government to still play its role to create a conducive environment for small business development while seeking to protect the interests of other citizens. So it is not possible for us as government to merely look at the sector or a small business in isolation without looking at the impact of some small business development within the context of the broader society and societal development. Ladies and gentlemen, one of the issues, I believe it's also reflected in the report that we received this morning, some of the issues that we battle with in terms of SMME development is the issue that we refer to as red tape. We commonly refer to red tape as issues that relate to regulatory burdens, but however, we would also like to reflect on those red tapes that are more structural and economic and that will require some economic transformation. As government, our focus is more on the latter, where we have to look at the structural economic reforms and not merely focus on the individual SMME. In doing that, we have to look at issues that relate to education, skills development, access to capital, access to land, market, and most importantly, building that capable state. And in building that capable state, it is engaging in these forums that we are engaging in today that we are able to build our capabilities as a state to respond to MSMEs. Now, ladies and gentlemen, I just gave you a little bit of a snippet of what our responsibilities are. In taking on those responsibilities, unfortunately for us as government or as the ecosystem, we are finding ourselves in a very peculiar situation where we have put a lot of initiatives in place to try and stimulate the economy through small business development. Everybody's doing a little bit of something. I was quite impressed with the data that has been produced this morning and what was reflected. And I made the decision that I will not be competing with the experts on data. I would rather use their own data to build my own story. However, the story always, in most cases in our country, is that it is a bit fragmented because of the types of initiatives and how we operate as government. We tend to operate in silos. My colleagues and I, as we entered this meeting, we were discussing that had we had sight of this information before we came here, we probably would have a better story to tell. So we still have these fragmented pieces in government where SARS is looking at issues of tax, you've got CIPC looking at issues of registration, and you've got Stats SA that's also looking at SMMEs. All these different interpretation, different stakeholders, all sitting with little bits and pieces of information. That makes it very difficult for us to actually construct what we would consider a development path for small business development. And in that context, it is very important that we do not only get together when it is engagement of such a nature, but when we start our planning, we start bringing in all our stakeholders so that we can start together co-creating value for small business development. Ladies and gentlemen, I think we all are aware of the academic arguments that have taken place around the role of government in small business development, whereas some would argue that government's role should be minimal and allow market players to actually determine the market access and conditions of the market. We have found ourselves where we have allowed the market to do that. There's been some level of intervention from government, and these markets have failed to self-correct. It is therefore prudent upon us that we all get together and jointly try to address the real issues that relate to red tape and the issues of unemployment and addressing some of these factors. In trying to do that, ladies and gentlemen, I'm going to reflect on two concepts. I'm going to reflect on the concept of financial inclusion, which is what we are talking about today, and against the concept of economic inclusion, which is what I'm reflecting on when I reflect on the issues of government and the role of government and how we need to start digesting the information that we are getting and we are generating as government. On the issues of financial inclusion, when we consider what has happened recently with us going into the 7th administration under the Government of National Unity, the focus has significantly been on us addressing issues of impact. We no longer are interested in what it is that we are doing, which we call our strategic interventions, but we want to focus more on the impact of those strategic interventions and where we are going. And I think collectively, we have agreed that the big picture here that we are trying to achieve is not merely economic growth, but it's inclusive economic growth. I think for all of us, that high impact statement still remains, and I believe it is still reflected in the medium-term budget plan of the 7th administration. I believe that government, this context of having that impact statement, and I like reflecting on what this lady, a very world-renowned global economist, I've reflected on the work that she has done before and how it has impacted the way that we do things in our country. When she speaks of having an impact statement where you have multiple strategically interlinked projects or interventions that will then be pushing towards achieving that one impact statement. In order to achieve that level of impact, she highlights the importance of working collaboratively across different stakeholders with different competencies, across all classes of society. And most importantly, she indicates to us that for us to achieve those high impact statements, we will need to build a culture of innovation and to promote healthy competition amongst not only our SMMEs, but amongst ourselves as society. For this reason, I wish to reflect not only on the concept of inclusion as a strategic intervention, but on economic inclusion as an impact statement that reflects the benefits of financial inclusion. So we do not look at financial inclusion as the end game, but we look at financial inclusion as a tool to the end game. In the previous presentation, it was reflected that about 85% of SMEs are financially included, at least from the numbers that we can reflect there. That is, I believe that number is not far from the number that we also have. And I think that is a very good reflection of financial inclusion of the individual. What we have then looked at is unpacking that 85% of that service that is being rendered to those SMMEs. Most of them have to rely on personal accounts and not business account in order to do their business. I think this is an issue that we need to carefully look at. So when we're talking of issues of financial inclusion, we are basically reflecting on issues that relate to risk management, investment, savings, credit, payment system, and insurance for SMEs. And those insurance and the premiums need to be cost effective to allow the SME to actually be able to operate in the environment that we are trying to create. So those are some of the financial inclusion measures that we are currently looking at. And I believe that what we have done in terms of fintech innovations and some of the partnerships that we have engaged in, we have expanded at least the pool of money that is available for SMEs to participate in the mainstream economy. However, there is still a limitation with this financial inclusion that we have managed to achieve, this 85% level of financial inclusion, that it does not go beyond the borders of merely creating bank accounts. We have to look at the bigger social issues that speak to issues of market access. I believe you reflected on those as well in the presentation. You would like to speak to issues of entrepreneurship, employment. But what I don't see also reflected in our presentation before this, which also might speak to the issues of the high levels of informality that you get, is the issues of skills development and our past legacies. We still have pieces of legislation that we are looking at reviewing to align themselves such that we are able to grant more of our people, especially those in the micro lending space, where you see those big numbers, those 1.6, 1.2 numbers of small businesses where they are sitting. We need to create strategies that respond to them. It also will depending on what we are trying to achieve, the end game. If we move it from mere financial inclusion and we move it to economic inclusion, we will then also have to look at different sorts of intervention and strategies for us to address the issue. Some of the issues that I can say, as I mentioned, that there's a lot that has been done as far as fintech is concerned, the innovation, we can look at those innovations, we can look at partnerships, and we can look at government initiatives. I think there has been many government initiatives, as disparate as they have been. There have been many that have been geared towards driving this. However, in order for us to really consider economic inclusion, we are going to have to address the systemic issues. And those systemic issues can also include financial inclusion. Some of those is systematic inclusion that relate to financial inclusion, relate to issues such as barriers to entry. Most financiers will require certain compliance requirements, or they will require certain capital injections to be made upfront. So those kind of challenges, we need to start looking at how do we comprehensively as government put in policy measures, tax reforms, incentives, all those kinds of programs to stimulate small business development while we at the same time promote financial inclusion to advance the issues of innovation and adaptation for the flexibility and competitiveness of small business development. Now, ladies and gentlemen, I'd like to just reflect on some of the issues. I realize that you've highlighted some of the big issues in your previous presentations, so I will not go back to that. But I would just like to highlight 3 key issues that we have identified that relate to financial inclusion when it comes to MSMEs. And some of these can be very minuscule, but the impact of them in our ability to include everybody and bring everybody with are very significant. What the MSMEs, I hear what you say from your side, but what the MSMEs have told us on our side is the issue of legitimacy and authentication, where they have to prove that they exist. There's issues of proof of residence, proof of the facility that you are operating from, and all of those in order for you to just access the basics of support, which would be anything from 2,000 to 1 million rand, as you have projected in your previous slides. And that issue of legitimacy and having to have that level of responsibility on an SMME to identify themselves, it's a function of government, but somehow it has been transferred to the MSME. And despite all the systems that we have collectively, we have not managed to address that issue. I believe it's something that we need to reflect on. It's not a challenge that is sitting outside of the system. It is a challenge that is sitting within the system that we can try to resolve. The other issue I heard my colleague was presenting again on the issue of formalization. I believe on this, the sensitive matter, especially when it comes to MSMEs, that what we have found from especially the longitudinal study that we just completed as the department, that there's issues that relate to the true cost and complexity of formalization. So it is not only about digitizing that is going to solve the problem. It's not about putting a digital system in place and thinking it will solve the problem. The numbers are sitting at the micro level. The 1.6 million, that's where the money is, and that's where the numbers are sitting. Digitizing those people is not going to assist. What needs to happen is we need to start right from the beginning, where we start educating at the basic education level. We start educating our people, and we try to reverse some of the impact that our people have suffered under the apartheid regime, where education was the weapon that was used against them. And now today they are requested to adapt to technology when they actually lack the basics of education. We need to look at that and also look at our requirements as regulatory bodies and our licensing requirements as governments and other licensing institutions. Also, MSME-friendly financial instruments. We seem to be lacking in this area, where there's a lot of instruments, there's a lot of innovation that's happening in terms of getting financial inclusion. But in terms of allowing for financial growth and financial development, we are not just creating sufficient platforms or instruments for small businesses to actually get to a point where they are developing. In fact, I believe in this country, we are unique in the sense that it would be much easier for us to get a loan for consumption than to actually get a loan for something that we can use for production. That is an item that we need to solely focus strictly on and see how do we address that. Some of the issues that we have picked up on as the department that we are also looking at in terms of addressing those very issues. The department has just concluded what it calls its MSME and cooperatives funding policy. And within that policy, what it purports to try to achieve is to try to improve the coordination in the ecosystem and the policy, and provides us with the guidelines for this. It also proposes to set up some sort of database that will be used not only by private or business or government, but will be collectively used by all stakeholders that are interested in small business development. We need to improve the provision of startups and capital. I think I don't have to say much about that. It was reflected in the slides that were presented before I came onto the podium, and that is a significant issue. But in order to promote that kind of provision for startup capital, we need to look at the unique developmental characteristics of the MSMEs that we are serving, that most of them do not have instruments such as collateral to back up the lending that they require. Most of them do not have family members, as you reflected in your slide. Most of the SMMEs say they can rely on their families and so forth for business support. But unfortunately, with our SMMEs and our development path, it is not possible for the previously disadvantaged to have that kind of access to that kind of resource. So that's also an area that the policy aims to look at. The policy aims to also try to consider issues such as credit risk assessment, that credit risk assessment not necessarily be linked to the individual, but it be linked to actually the business itself. There seems to be convolution about that in the ecosystem, about who exactly are we assessing when we say that we are assessing business viability. Are we assessing the business owner on itself independently, or are we assessing the business itself? And in the true sense of small business development, there will be a need to shift slightly from the focus and sole emphasis on personal financial stability versus the possible implications of lending in the correct sectors at the right levels. We might actually get the right numbers of job creation that we can get out of that. In addition to that, ladies and gentlemen, the department is also looking into reducing regulatory red tape. I think what we have started with this financial year is looking at what government can do. We have identified pieces of legislation where either there needs to be some form of review. And when we say review, we are not saying regulatory reform or deregulation, but there needs to be some consistent assessment of whether certain pieces of legislation are adequate to provide service to small business in South Africa. And we also need to assess if certain pieces of legislation are actually supporting us or they are a hindrance. My apologies. And then we have to look at issues of efficiency. We are looking at trying to introduce, because most of our local municipalities are busy engaging in business licensing, and they are looking at old legislation in order to do so. We are also looking at processes to try and improve the licensing processes at municipal levels to try and support our SMEs. In conclusion, ladies and gentlemen, I don't think that there is much that we can add to what already has been presented. But in terms of where we are going as the 7th administration of government and all the efforts that we are putting in place, there's only one thing that seems to be clearly coming out from everything that we have said so far, that if we are not working together towards impact, then we might as well forget everything else, because the small little bits that we think we are shifting, if they are not all focused towards co-creating inclusive economic development, not just job creation, inclusive economic development that takes care of the people as well as the business environment within which they operate. Thank you, and I wish you the best of luck for the rest of the day.
Thank you, Ms. Mosamakele. I think from that, we know that we need to have a big impact statement, and we can achieve that big impact statement without collaborating, putting our efforts together and making sure that we're able to support the small business enterprises in South Africa. I'm now going to hand over to Obed, Mr. Maphosa. We'll have a panel discussion. Mr. Maphosa, after that keynote address, I wonder what your panelists are going to discuss. Are you going to tell us about data challenges, or have you maybe decided to now think about that impact challenge that was given to all of us in an ecosystem? Mr. Maphosa, over to you. He will then introduce his panel members. Obed, over to you.
Good morning, and welcome to the panel discussion that I'll be leading. Today, I've got a treat for you. We've got 3 panelists with extensive knowledge within the ecosystem that we'll be discussing this morning. And but before we jump right into it, maybe just to reflect on the presentation that has been made and quite a well-rounded keynote address that has been given by Ms. Mosa. And in that light, I think there are quite a few issues that have been highlighted. Particularly to note, the first is the rise in the informality in terms of the MSMEs that are unregistered, unlicensed. And this has been a trend that we're seeing not only in South Africa, but across the SADC region. And I think there are some issues that we're going to have to discuss today briefly, that she's touched upon in the keynote address, such as the structural red tape that exists in our legislative and in our departments functioning and collaborating together. And also there are some systematic challenges that are at a grassroots level, that need to be addressed there to aid our discussion today on formalization. Another one quite stark is the use of cash, which is rampant still in our consumer and MSME surveys. The use of cash is increasing despite the increase in the digital financial system uptake. What are some of those drivers that we are seeing, and is there an opportunity there for us to change and transform the economy through the MSMEs and helping them formalize and digitalize on their payments? Again, the importance of the MSME sector cannot be overstated with regards to how it aids GDP growth and employment. And we're seeing a significant contribution from the MSME sector, over 5 trillion across both formal and informal enterprises. We're seeing just under 14 million in terms of its contribution to employment. So it's not insignificant. It's something that we need to look at, particularly when we're now starting to see MSMEs in the broader contribution towards economic inclusion. And that is something that Ms. Mosa also touched upon, to say that financial inclusion is rising, but we want to start seeing the impact, and that impact is to transform the economy to be inclusive. So we're touching upon some of these talking points, but that was just to reflect on some of the findings that we've discussed this morning from my colleague Abel, and also that has been touched upon in the work that government has been doing through the DSBD, and looking at addressing some of these bottlenecks and advancing economic inclusion. So today, I think we have a really well-rounded panel, and we're going to be discussing some of these findings and some of the agencies and departments' viewpoints that can also try and unpack some of these findings for us. Without any further delay, I'll be introducing my panel, starting with Mr. Elroy Dex, who is from SIFA, which is the Small Enterprise Finance Agency. He is the head of strategy and planning. He comes with a belt of experience across the years of development finance in MSMEs, and was quite instrumental in writing up the policy development at the DTIC. Next, we've got Ms. Nontobeko Lubisi, who is the Director of Financial Inclusion at the National Treasury. She is key in providing the strategic direction for the South Africa Financial Inclusion Policy, the National Financial Inclusion Strategy, MNE framework, and much of what Memosa was talking about today is the fusion of those type of policies and that collaborative ecosystem within the policy and regulatory framework. So we're touching upon that today. Last but not least, we've got Dr. Pali Hosa, who is our former SG at that's SA, and currently the director of the Economic Modeling Academy, quite passionate about the civil registration and vital statistics in Africa. So these are our 3 panelists, and we'll be discussing a few of these findings and probably some of these questions to try and see how we can shape this argument of development and MSME growth forward. So to start, I will reflect with, I'll start with our lady, Ms. Nontobeko. I think maybe you can just give us maybe a 1-2 minute overview of what you digested in these discussions this morning.
Thank you, Obed. For me, there were just two key takeaways from the presentation, and I think this morning. And one of them is one that I always say actually to myself, and that I've summed up over the 5 years in the development finance space. And that one actually talks around the fact that one cannot lead the financial inclusion movement if one is not genuine. And the presentation basically tells us that if you are working in the space, you do need to be genuine. The key takeaway that I picked up is basically straight on. I liked how Abel went straight to the objectives of the surveys, and we see that one of the objectives talks around segmentation, and that for me is one key point that I've always sit on, and I've always been trying to drive within the National Treasury, because for me, I believe that we all come from, for instance, informality. So you cannot be able to design products for people that you do not know, for societies that you do not understand. So for you to even tackle that strata, that group of people, you would need to basically understand what their needs are. And for policymakers to make an impact, as well as our FSP, they actually need to basically go into those communities and understand how those communities live and how they actually make their decisions. So product design for me, and customer-centric kind of thinking, it should be the driving force of financial inclusion, because I think, as the previous DDG said, it's that it's not a matter of just saying you are digitizing, but you also need to look at how ready are those people that you are trying to provide that solution for. So issues around digital financial literacy of those individuals, as well as consumer protection of those individuals, will always come key. And you are not going to make strides if you continue to provide solutions, but you are not, in essence, then empowering those communities to take on those products. They would simply look at the product that you have developed, and they will not basically hop on and adopt that product. So that is for me very important. Product design and segmentation of our informal of our MSMEs. The other thing that was also clearing for me is the fact that most of our SMMEs are basically falling in the startup category, which basically, and also then you also see that they are in essence informal, and it's the township and it's the rural communities. And for us, it automatically says to us that these are sort of like, this is a risky type of a segment that we need to work with. And for National Treasury, it then directs us to Pillar 3, where we actually need to start acknowledging that we cannot keep saying that, oh, we would rely on the commercial banks to actually address the needs of this segment, but actually then says, let's look at Pillar 3, which is under the policy, which says, let's look at other institutions that can actually play a key role in the space. So we are looking at, for me, automatically when we talk about micro enterprises, you are already talking about your development microfinance institutions. And unfortunately, we need to also acknowledge that as government, we have actually not done much to ensure that those institutions are strengthened. So, and then the other thing, digitization talks to fintechs as well. We need to actually also empower our fintechs that are coming into the space to place them in a position whereby they're actually able to function, not necessarily having them being seen as competitors to the bank, but they need to sort of like be empowered so that they're even able to collaborate with the commercial banks as well. So for me, those are my key takeaways from the presentation.
Thank you, Mayor Luisi. And I think what is quite key from what you're saying is the acknowledgement of government, in particular our policy framework, and which is something that you are quite well familiar and invested with. How is this sector seen in terms of policy development? And what are some of those nuggets within policy that you've mentioned? Segmentation is key. Who are we targeting in this? The MSME is broad, right? We have women-led enterprises, we have youth-led enterprises. Like you're saying, startups are seen as risky. What are some of those segments that you understand within the MSME sector that have gone back into policy and are shaping the next the next development.
I think for us, what has been critical is our work with the Department of Small Business Development. When I started on this journey, I actually realized that there was no way that I was going to be able to make strides in this role without that relationship with the Department of Small Business Development. And what you've seen there is that as a treasury specialist, for instance, I'm not on the ground with SMMEs, but the relationship that we've then established with the Department of Small Business is such that you will see that the initiatives that we have in the financial inclusion policy, which talks to issues of how we're going to enhance the financial market infrastructure, that is basically issues around our credit reporting and risk assessment systems in the country, because those need to be reformed, because then you are not going to be able to make movement for the targets, which are your SMMEs that you just mentioned. Also, we also have acknowledged that you do need to start recognizing other forms of collateral, for example, movable collateral as a form of assets that we can use for these micro enterprises to advance when they are actually looking for loans from financial institutions. And then we also then talking about modernization of the payment systems, and we already see pilots on the ground like the community digitization project. And then the other thing that we also are in conversations with currently now, which is a new conversation that has started with the Department of Small Business, is around how do we then recognize other financing instruments, because we've already said micro enterprises, informal enterprises, it's a risky segment to deal with. But then what do you do? It means that you need to look at other forms of financing, for example, debt, equity, and hybrid instruments. And we've already started very preliminary discussions around is there a possibility of developing a fund of fund, and now the issue that we then had last week was what would be different about this particular fund of fund, because there are fund of funds there, but what has been lacking with those, which will make this one different? Because when you present a case, for instance, to National Treasury, that's where they will be asking you what is different with this fund that other funds have not been able to do. And that is when it goes back to then the segmentation and understanding your customer, whereby when you pitch sort of like a proposal to the National Treasury, for instance, you would actually need to understand the communities, because that fund of funds should be driven by the needs of the segment, with your micro and informal, and then it should actually inform what has been the gaps in the previous ones that have been designed. And those are the kind of discussions that are then currently there. And I think for us, then I would agree that we have already really seen that you do need to focus on that startup level, the micro, the informal, because really we have not really done much to come up even with a proper regulatory framework for the informal sector. So that is where the discussions, I think, slowly then at the Treasury are also then shaping, because you realize that you are not going to make strides when you just sort of like forget about the informal sector and move on with your life. It is there, and there is work that government will need to do in that space to ensure that all those enterprises, they then do thrive.
No, thank you for that. I think it's quite important that you acknowledge that the informal sector has been actually overlooked in some of the current regulatory and policy frameworks. I think when we go in to define what MSMEs are, when we go into design programs, they also look at formality. Even the support services that are mostly designed are going towards formalization. So what are some of the key stakeholders? I think you mentioned DSPD, in terms of how you go into your monitoring evaluation frameworks and some of the collaboration, your fund of funds, as you mentioned. But what are some of, what is lacking in terms of other stakeholders? As memos are also articulated from our point of view, is that we have to look at it collaboratively as an ecosystem and leverage on the different competencies among other stakeholders. Just rounding it up there from a treasury perspective, what are some of the key stakeholders that are currently you're working with, but that you aspire also bring in, like you mentioned, issues around digital financial services, your digital literacy, and your fintechs, your development microfinance institutions. What are some of these stakeholders from a public and private perspective?
So we we have, I think also when it comes to collaboration, for instance, in the financial inclusion space, I would actually acknowledge that previously it was not structured collaboration. So we did have institutions that have been working on development finance, but there was not a properly structured governance framework around collaboration. And what we have done now at the Treasury is that we have decided that we are going to tackle collaboration in line with what the Financial Sector Regulation Act says. And the Act specifically says that there is a need for government. There should be a structure that basically governs financial inclusion in the country. And then that structure is called the Financial System Council of Regulators. Then it actually what the Act then did was to give powers to that structure to establish official working groups for financial inclusion in South Africa. So what we've done, we have resuscitated that council, and it actually met on 18 July, chaired by the DG of National Treasury. And we have established, in essence, we received an in-principle endorsement of the establishment of a financial working group for the country. So that financial working group basically will consist of what you will call your government role players. But what it is then going to do is also then establish a forum of your private sector players. And then you are looking at your MNOs also. How do we bring in mobile network operators into the space? And it also then talks about the private sector as well, a forum which basically looks at your role players in the private sector. And we think that having a more defined and structure around collaboration in this instance works. And we've also acknowledged that government alone is not going to be able to do it. So which is why then we will actually look at the forum, which has your association, your industry associations, to actually help us to come up with initiatives that will then be contained in the financial inclusion strategy. Because what we released last year is a dream document. The policy is really a dream document. It's not saying anything around targets. It's not saying anything around budgets for some of the interventions that are very big dreams in the policy. But now the next phase is then where we have the inclusion working group and the forum, which consists of the private sector, looking at an implementation plan, in essence, for financial inclusion in South Africa. And the nice thing about having that collaboration being structured is that once the draft implementation plan or the strategy is developed, it goes back to the council, which is then chaired by the DG of the Treasury. And in that council, in terms of membership, you also have DGs of other departments and CEOs of the financial sector regulators. So that strategy will sort of like get an in-principle endorsement before we then start saying that let's then roll out. So that is why it has been for us very important to set up that foundation, because we realize that things have been happening. We're not saying that financial inclusion initiatives have not been happening, but the fact that they have not been proper coordination and collaboration of everything. That's why we find ourselves when we see we are busy, but we are not making. You have accountability. I might be able to see a different shape and form in terms of how we move going forward.
Thank you for that, Melvisi. I think it's quite well rounded. It cannot be an afterthought. The collaboration, identification of key players within the sector that will drive this forward is quite important. And some of the roles are actually with Mr. Elroy there at SIPA. So maybe a few remarks on what we've observed today in terms of the findings before I go into a few questions around SIPA.
Yeah, maybe I want to make maybe 3 remarks on the findings. I think it's a very rich data set that I think needs to be mined a little bit deeper, especially for program planning. Now, I mean, we've been in this space. SIPA was established around about April 2012, so we've been around for 12 years. And we've been supporting the sector really through 3 channels, through direct lending, through intermediary lending, and through credit guarantees. Those were our main program instruments. But if I look at the data, and especially the funding gap, it begins to start impact how minuscule our contribution are in terms of, I think Musa was referring earlier to with regards to impact. And just looking at our total contribution thus far, it looks like we've been like sitting in the region of close to 2%. Our impact. So it maybe talks to broader issues. One of there's actually a need for bigger social corporate in South Africa that can actually talks to the whole issue of financial inclusion. Because I think there's other structural issues that we need to begin to understand, that I think especially lending to the missing middle, or like they say the startup phase, you would have found that there is a little bit of credit rationing that has taken place in the market, right? With the result in saying that we need to begin to start talking about how do you get all the players to begin to start contributing. Because I think small business development is about private sector development. And how do we get the private sector to actually collectively take responsibility with government with regards to addressing the challenge that we have. Also, I think the issue of refinement of programs and program implementation to make sure that actually the program that you're trying to offer actually offers the right instruments for the sector that you want to target, and also when you want to come back from a monitoring and evaluation point of view, where it actually makes the impact. So I think those are, for me, are the three insights into so far the presentation that I've heard this morning. Obviously, we need to refine a little bit deeper and begin to start saying that how do we internalize these issues at CIFA itself. Okay.
Thanks for that, Delroy. I think you spoke about the three levers that CIFA has been mainly using in terms of that, and how minuscule it really appears when you really think about the sector, and you highlighted the funding gap. Informal MSMEs don't form part of that 2%, do they? What do you think is the role that CIFA will have, in thinking about this going forward? I know formality is quite a very dense subject, because for us to unpack it in its truest form is that it's a transition. It's not a state of black or white. It is more of a continuum, and compliance and issues around that then start to become part of the conversation. What is CIFA doing, particularly in rethinking and designing, particularly on the funding gap that you've mentioned? Do we need more? Do we need to petition for more? The contribution of the sector is well documented from the findings. What do you think is the role of CIFA in that, particularly informality?
Look, I think that, firstly, we need to recognize the role that the informal sector plays in overall economic contribution, especially in the economy where we are not able to create formal jobs. And so the informal sector becomes an important role for absorbing labor. Right? And it's also an important role with regard to self-help activity as well as income generation. So I think we need to, firstly, we need to acknowledge that role which the informal sector play, but also in a role with regards to supporting livelihoods and income in the economy, especially in an economy like ours where there's major restructuring that's taking place. Now, as CIFA, since 2012, if I can think through our numbers, we've been maybe contributing around about 2.9 billion rand that we've disbursed over the last 12 years or so to the informal sector, mainly working through two programs. So we support microfinance institutions that provide developmental credit, and mainly through group lending programs in rural communities in Limpopo, Mpumalanga, southern northern part of KZN, areas in the Eastern Cape. And we've reached roughly in the region about 700,000 enterprises to these instruments. We've also, about 5 years ago, launched the Township and Rural Enterprise Development Program, TREP, which is mainly focusing on township entrepreneurs in key sectors such as retail, light manufacturing, clothing and textiles, as well as certain parts of the automotive aftermarket. And we've seen certain tractions in these programs, but I think there's three areas in the developmental credit space that we actually need to look at. One, we need to look at how do you bring microfinance institutional capacity to urban and peri-urban areas, because if you study the NCR data, you would most probably see that there's a gap with regards to urban and peri-urban lending, especially from alternative institutions that can provide credit. Then we also need to look at how do you bring the banking sector back into the development credit space. And maybe this is where some of our instruments can begin to start playing a role, especially with regards to our credit guarantee instrument, whereby commercial banks that is not able to penetrate that segment of the market could possibly on-lend to microfinance institutions, and we as CIFA can possibly guarantee that particular lending that takes place. So that in a way, you almost overcome some of these enormous credit rationing instruments that is taking place. From a commercial bank point of view, I understand where they're coming from with regards to information asymmetry challenges. But I think as CIFA, as development finance institution, we need to begin to start putting in place what sort of instruments can we put there to overcome those credit rationing challenges that we have. Then I think that the debate, don't want to go into the discussion about formalization and why government wants to formalize, right? But I think that we need to begin to start saying, but what sort of instruments do you want to put in place that makes it easier for businesses to account for their business activity, so that when they come to lending, they can easier present those types of results for a lender to assess some business performance, to look at what sort of financial instruments that you can make available.
No, those are quite key, and I think it also speaks to some of the development policy issues that we have. Information asymmetry, you've mentioned, risk, and the role that you play in de-risking some of these financial instruments and increasing the appetite of private sector, like you mentioned, with banks, it's some of those. You mentioned a high level of the startup and your micro enterprises, which also tend to be formal because that's where they are birthed, right? And how those levers that, from a financial instrument perspective, you can come in. And I think just trying to measure the two together is the role of that segmentation, right? We've got youth enterprise, and we've got a lot of unemployed youth in the country. And Musa also mentioned issues around tackling it at grassroots level and saying maybe we need to start our entrepreneurship and business acumen, digital financial education, and all of that at a very young level, which goes back to school, right? So that when we are at this point where we have young people starting businesses, they have that acumen. What are some of those non-financial instruments that maybe they're not available at CIFA right now, but could definitely aid in terms of how businesses are accessing finance?
I think as CIFA, we first want to say that we need to acknowledge the challenges that young people face in South African economy. I think that, maybe some of the data indicates that if you are 24 and if you're not in the formal labor market, the chances that you're ever going to find a job is most probably very slim. And I think as CIFA, we want to acknowledge those particular challenges that young people are being faced with. But the key also to supporting young people is all about how do you overcome the challenges of information asymmetry, because ultimately you are a lender, right, that makes decisions on the basis of what is the business case that's in front of you. So how to overcome almost the challenges of information readiness is what is the type of programs that you invest in terms of funding readiness. So I think that is a big discussion that I think that we need to engage in, that says that how do you introduce funding readiness programs that will enable young entrepreneurs that wants to venture into entrepreneurship? And we must acknowledge that entrepreneurship is a lonely world. And that at one stage, when you start, you're the marketer, you're the technologist, you're the human resources person, that it's all embedded in this young person that's got this idea or dream to start a business. So the support of almost coming, what I wanted to get is almost like, as a financial institution, we are interested in the inside of the pineapple. So the issue is that who skins the pineapple becomes the most important part for successful entrepreneur, youth entrepreneurship to thrive in the economy. And what we also need to acknowledge, when young people gets involved in business, they normally come up with innovation. And many times they solve many of the challenges that their local communities are being faced with this. Right? So, and I think encouraging youth entrepreneurship will most probably be those vibrancy that they bring to our local economy. But also then we need to begin to start saying, but what are those instruments that we can help them with to get funding ready? Maybe support with regards to business planning becomes an important element. Issues around record keeping and bookkeeping becomes an important. Issues around networking, mentorship becomes very important for them to grow and get the necessary experience, also to become successful. So those are the things I think are programs that we need to begin to start saying that, but how do we invest in these funding readiness initiatives for them also to become successful? Because ultimately our success rate in South Africa on survival rate of startup businesses in the economy is like the mortality rate sits at 78%. So the issue then becomes, if government wants to begins to invest as an instrument of entrepreneurship, we need to look at how do we deal with the mortality rate. And the mortality rate will most probably come from providing the proper funding readiness instruments, but at the same time also the post-investment instruments for the longevity of these types of enterprises to survive.
Thank you for that. I like the analogy of the pineapple, right? We invested in the sweeter part, but growing it and making it ready is equally a tumultuous task.
It's a selfies from a funder's point.
Thank you for that, Elroy. Dr. Lekwa, we would like your take on the findings before I ask you some few questions that round up our discussion today.
No, thank you very much, and thank you for inviting me. This is the second time I get invited here. The first time was up from the population point of view. Now this time it's an institution, many of the businesses, and there isn't much one can say on the data. The methodology is fine. The findings are very truthful. They are quite nightmarish, but they are unsurprising. And they are unsurprising because this is the impact we designed. It comes from our own tools, our own intentions. It's intentional that we are in this state. We cannot say somebody else put us here. Our policies have driven us to these results. So the question is whether our response is equal to answer the questions. And listening to my colleagues here, I am unimpressed. I'm not convinced. And then I come to why I'm not convinced. I mean, government is a habitual offender. Habitual offender. Here, support to business. Government comes last. Majority does better, and we knew this all along. From the surveys that we ran in 2005 when we started the survey of employers and self-employed, the majority were doing better. And government was nowhere, just as it is nowhere 20 years later. So you talk about intentionality. You're being intentional about this. It's not like of data. It's insensitivity to things. Look at how much has business spent on energy. 38% say, well, we had to go and buy a generator because government decided to destroy POSCO and introduced the greens. Now, ESCOM, they said government was saying the machines are old by its own mouth. That you cannot fix ESCOM machines, you can't do this, you can't do that. You put money with politicians, you really get a bad result. You bring engineers. Matsila Gogo said, fix ESCOM, fix the machines. What is Tegodan and the Maruan? They fix those. We are back to where we are in 2018. But in the meantime, small businesses spend a lot of money buying all these useless things. What are they going to do with that capital? So I'm saying we have been very, very intentional, even in the recent 6 years.
So
the results are very revealing on this habitual offender.
So just thinking about it from that perspective and moving that responsibility, there are structural issues, like you were mentioned, the energy crisis, right? A lot of businesses have to spend money on trying to even maintain some of their contractual obligations and still produce in that tough climate. But now thinking about it from a sectoral perspective, does this, I mean, you've worked with this data for years now. What would you say would be the answer for MSMEs on themselves without looking necessarily at government or private sector within the structure of and how the composition of the MSMEs are? What would you think are some of those levers that can grow the absorption of employment, the contribution to GDP, despite some of these dark clouds as you've mentioned?
No. I mean, let's think about this. You are giving birth to a child and you say, how will that child grow itself? That's exactly what you are saying to me. We got to create that ecosystem. My colleague here says they've been having 2.9 billion for the last 12 years and they supported 700,000. Do the arithmetic. It's 4,000 rand. There's a new. What's that? I mean, cannot fix a business. I mean, the president said the 350 made this man an ice cream entrepreneur. Now, when people quote those statistics, when you find the statistics real here, seemingly being almost the same as the president's dream of 350 rand, you can see that the ecosystem is wrong. And it is because the credit extension, the ecosystem of credit extension, the ecosystem of industrialization and everything in South Africa is predicated on market forces. And those market forces have created this poverty. Now, go and look at the report by the IMF. Go and look at their Treasury report. 1% growth this year, 1.3% growth next year, another 1.5 after 3 years, and then probably some 2% or 2% in another 5 years. When Rome is spending, and you say that the government of national unity might be spiked into action for an impact of 1% growth, 2% growth, I mean, these guys are asleep. Quite frankly, the government is asleep. There's a tragedy facing this country. The energy that we are getting is going to get more expensive. And energy is the driver of everything. We've invested 10% and we are paying 20% of the revenue to this 10% contributor, which is uneven and undermining the main source of our energy, which is Eskom. And this SME is dependent. So we really have to face these things and stop skirting around. This document shows what businesses are going through. The ecosystem for which government is responsible is absolutely unresponsive to this condition. It's not going to change. So the DDE made very important points around impact. Now think about impact. You go to government documents, including the recent MDTP thing. It doesn't have targets for reduction of poverty. Even if it had them, I wouldn't believe that they were serious because they don't have the tools to drive towards that. So we are hurriedly talking about what we should do now, today. And it takes a number of years to evolve those things. And I don't think a government has any agency on these things. So, my brother and colleagues, this document is so true. I think you were to project, you'll say nothing will happen because we are busy coming up with another government of national unity with different policies that are divergent. and hoping that we can make them converge. They are not. It's going to take a lot of time. And the people that are there are not expert enough to deal with a different possibility for an economic policy. And when we have that, you really face a very difficult time. Your former minister, Robert Davies, said, well, for as long as your macroeconomic system doesn't include the Treasury and the Reserve Bank in its resolution of these problems, then your master plans and everything will go nowhere. We are back to the master plan this. In the modeled results of this, they will only give you 1% when we've done everything. And there is nothing beyond that tells you. So unless we become honest as a country and say our problems are unemployment, poverty, and inequality, our problems are not growth. Our problems are these things. Now let's look at these things and say, how do we get out of that? Then we may deploy growth as a solution to that. We have defined our problem wrongly and say it's growth. No, our problem is unemployment, poverty, and inequality. If you start looking at that, then we'll say, how do we create this growth that will solve our problems? At the moment, it will not. Now, let me just tell you, government was approached by business in 2020 when COVID hit, about June. They said, government, here are the targets. Target 1, growth will be 6%. Target 2, unemployment will reduce it to 15%. Target 3, inequality will reduce to 0.43. That's it. Debt to GDP ratio, about 0.63. We have this bag of projects, government, we want to talk to you about. What did government do? It's not that. Nothing came out of that process in an organized fashion of saying these are the targets we want to achieve. Government has now been isolating some businesses, bringing them around the table to take on Transnet, take on ESCOM. The moment you go to projects, when you don't have targets, then you are engaged in super corruption. Because then there's no process by which you go to the target and say, if you, Mr. X, that we have brought to ESCOM, what is your contribution to the target of unemployment, poverty, and inequality? There is no reference to that. And this is the problem. We've got to go back to business with that idea. We go to the targets, we have to create a path to those targets of achieving that, reducing unemployment, reducing poverty, and ensuring that inequality goes. Then once you go there, then we'll start addressing these things, including the issue of credit extension. 2001 to 2002 to 2007, credit extension was double-digit, 15%. Credit extension.
What enabled that, by the way?
Well, government led. Yes, it led. Gross fixed capital formation was 24% of GDP. So if the GDP was 24%, was gross fixed capital formation, which is basically working on the infrastructure, ensuring that there are jobs and everything. Now gross fixed capital formation is 5%. I mean, it's the dollar terms. All this jamboree of investment conferences and everything, it's a waste of time. It doesn't show in the gross fixed capital formation. And from 2012, they've been in that doldrum situation today. So now this report is just reflecting the result of this serial offender and ineptitude. But I think it's a good wake-up call.
I think with those words, I'd like our panelists to have some few remarks in us closing. I think he's pointed out the enabling environment is critical. We cannot expect growth and sustainability closing in on the income inequalities, economic inequalities that exist. So those are the core issues that we have to address and create an enabling environment. You spoke about the dream document, right? And how it needs to actually be more prescriptive in what is going to happen, the inclusion of other stakeholders, and actually setting targets, which is something that is also mentioning. And increasing, the minuscule 2% that you mentioned is also alluding. What are your comments around this, and how can we actually, take this conversation forward in terms of the role of government, but also holding private sector accountable to some of those, achievements? You can start.
I think on my side, I would say I echo probably the same sentiments as the previous speaker. Like as I've said, I mean, no, you cannot lead financial inclusion if you're not genuine. For me, it's always been that kind of stance. And also the other challenge also, I mean, as he says, it's also, the time it takes to get things rolling in government also. I acknowledge that. And I mean, for me, it was also what also struck me was existing in a country where you do not even have a financial inclusion policy. So for me, those have been kind of my issues that have bothered me for quite a long time. And also, as I've said, not even having a clear governance structure around collaboration and having people moving all over the show. But when you come and ask, give me specific data on someone who is in Mpumalanga at a township, then you are not able to produce that kind of statistics. And for me, that is what I think I have most probably worked around trying to put those then systems in place and saying, get your policy framework. Firstly, you need to have a commitment in principle. You need to do that. Then you need to have a strategy. Then from there, you need to have an MNE framework whereby you start measuring what you have actually committed yourself in your vision document. And another thing with the MNE, with the technical working group that we want to establish, we actually want to get to a state where I even said, for me, it doesn't make sense that we have an official supplier of statistics, for instance, who would measure inequality according to certain dimensions such as access to water and electricity, but there is no indicator that actually says, let's look at access to financial services, because it is, for me, a key dimension that has been neglected. So there are a whole lot of, as he said, kind of like designed outcomes that we put ourselves in, because we are in essence where we are because we did not probably have foresight in terms of some of the things that we were supposed to do. And for me, that working group is critical because I've had even conversation also with FinMark Trust where we've said we don't even have a proper funding model around how the SMME data collection is going to be handled in the country. And I mean, we've had the SMME, the FinScope 2020, was it 2010? And then we came again in 2020, then it's now 2024. So this is basically our third FinScope in South Africa, problematic. Yeah. And also there's still no clear resource strategy around how we're going to fund our FinScope SMMEs as government. And these are in essence the basic things that you would need the Treasury to also get right, because then it's pointless. And ultimately, the conversation should then also shift towards saying, basically, all this data really through the NSS model system of StatsSA, StatsSA should be able to actually be tracking access to financial services data. We have actually probably given it to FinMark, and FinMark has been so good to us as a country. But really, with time, things need to evolve, and we need to really be saying that access to financial services is really a key determinant that we should have been tracking as government. So this is where we are, but I think with FinMark Trust, with other stakeholders who are actually ready to work in the strategic development phase, we should be able to try and make a bit of progress in solving some of the gaps that have been there.
Thank you for that, Suri. And I like the ownership, the accountability to say there is a slacking. We've designed the problem. We need to fix it internally. What are your remarks there, Elroy?
I won't venture into the monetary policy. I don't think it's the forum for that. But I think the core issue most probably would be to say, what will be the impact if you increase the supply of money into the economy, into small business? And how do you measure that from an outcome straight up? And what sources they need basically? Because the issue is that on one level, maybe it's a monetary policy issue that causes a fiscal crisis in the state to increase the supply of money. But what sort of ways or leverages to gain access to money, and how efficient is that money going to be in the economy to create the necessary growth that can spurn up the issue. Then the second issue is that if you're a bank and you've got a financial intermediation license, what sort of accountability questions should we need to ask from the banking sector with regards to the accountability with regards to lending? I mean, there's other economies that has gone very tough with regards to rules and regulations on lending and depositing and all of those types of issues, which we need to ask the question of what is the accountability that we have if you've got a financial intermediation license. Then I think the third issue for me most probably is to say, how do you, in an economy as such as South Africa, how do you scale up activity? Right? It's fine to have all of these pockets of projects, etc. But what we need in our economy is most probably scale. Right? Scale that can include more people and more business activity. So those are maybe my three, and I don't want to engage in a monetary policy.
All right, so that's fine. Our time is up. Just 1 minute to wrap it up.
Okay, yes, I mean, look, I'm talking about this serial offender. Now we have a two-board system where all, you have to ask the fundamental question of why do you have a pension? You do that so that you have aggregation of resources to address mission challenges. Now, I start having no sugar, my burden on my house, on my bond. Now you say I should go and draw that money from that so that I should answer these processes of the stomach. So you see, the design by this serial offender is one that is impoverishing. And if we don't start asking those questions of why don't we take our own money instead of saying a two-board system, we go and fix ESCOM so that it generates power, and then we can increase the returns of the monies of pensioners to that, rather than them going and we eat the seed. Now you have children who stay with their parents, they don't have jobs, they are looking at the pension of the parent. We actually have a very serious problem and a serial offender government that doesn't actually attend to these fundamental issues. And we keep on skating on these things as society. No one is holding this government to account. And business is the winner all the time. Go and look at their returns, their financials every year. So
thank you for those closing remarks. I think there's much introspection. But thank you so much to my panelists, Mary VC, Elroy, and Rehosla. I think I'll hand over back to my colleague to take us through this one. Thank you so much.
Thank you. The camera is showing my body, so I'm going to sit down so that you can see my face instead. Thank you, Obed, and the panel members. You heard from Tatele Hotla. We have a serial offender. It's not my words, Elroy, it's not my words. Tatele Hotla said we have a serial offender. But I think that offender needs to be supported, right? And it's institutions like ourselves and it's institutions that are on the call currently that are listening, that need to come to the party to help that serial offender to stop being offensive to its community, its society. And we can't expect you to do it alone. So we're going to now hand over to Phumelele, who's going to tell you what we do with some of these results to help the serial offender to do better. And I think it will spark, like I said when we started, the intention of the results is to spark conversations amongst yourselves to say, what can we do differently? Phumelele will take you through that and she will close so you will not see my face ever again. Thanks, Phumelele, over to you.
Thank you so much. Thank you. And thank you to the panelists for the robust debates as well as the honesty. I think that's what the country needs, really. And thanks again to the team, the FinScope team, all the service providers that are supporting the FinScope team to make this work possible. We really thank them very much. And we have a group of syndicate members that on a yearly basis, they make this possible because they believe in the cause. And like we said, this is just the tip of an iceberg. We will need a lot of time to share the data that we have. But we have to invite people to be able to, you can participate as a syndicate member, as well as you can reach out to us if you need more analysis of the data that we can share with you. We are very open people. We like to talk and we like to share the results so that our stakeholders can do the difference. So my job, as Leseho has indicated, is also to just share that there is a lot that needs to be done as per the results that we've seen. There is some positive movements that we are seeing, but I think the picture in its entirety is saying that we cannot continue to just sit like this and say someone else is going to do it. It needs a holistic approach. It needs joint effort. And as FinMark Trust, I think we also understand that creating an enabling policy environment also that is tied with very specific strategies and implementation plans, because it's one thing to have a policy, but what then happens once you have a policy and where is that leading? So FinMark Trust is really working very closely with the National Treasury and other stakeholders as well. We've supported, the finalization of the policy at the beginning, the financial inclusion policy, but we are still in the picture to now say, what is it that we are going to do as part of the implementation plan and the strategy to take this forward? And I think that is very clear in our work. We are now busy and not be able to say we now need to formalize those financial inclusion working groups that are now really talking to expanding and opening this up to say, we are not going to do it alone. We need you and you. So government, as well as the private sector, the regulators, we need them in one room so that we can make it possible. So there is one project that we are working with and we think is going to help yield the positive results. So if you are a stakeholder and you're participating in this and the invite has been extended to you, please do participate in that process because it's going to be very important in changing the future. We also do have another project that we are doing, which is really on informal MSMEs, because I think we are seeing this to say, year on year, these results are saying there's a lot happening. They are contributing. They're not just sitting. They are generating employment. But when it comes to support, they have to, bend over backwards to try and make things happen for them. And they still lack of information a lot, like we've seen, to say some of them are doing well. But when you talk about registration and all these other things, they don't know why they should do it. And you can see there's a lot of education that needs to happen there. And again, we are of the view that they are businesses already and they should be supported where they are. So there is a project that we are also working with SASSA and DSD and the NDA, which is focusing on supporting child support grant recipients, which is young mothers, to generate better livelihoods for themselves. If you look at programs that are talking about livelihood promotion, we are just busy scratching the surface and looking for things because everyone is looking for a registered business and then they can invest. But this project is the one that is sparking ideas and supporting ideas and making people to think about more. They are recipients of the grant, but they are young and they want to do things for themselves. And we met a young person from Kwamashu, and they say on a daily basis, I have to run away from the municipal police because I don't have the means to get there. Should I not sell so that I can get the money? What comes first? The chicken and egg situation. So on a daily basis, it's either they take away the gas stove that she's using and now she's stuck, she doesn't have money to go and, release that. And it's those perceptions that are creating, an environment where people think, these things are not for me, they're for certain people, and we really need to change that narrative. So that is one of the projects that we are also piggybacking on the informal MSME project to say, can we look at linkages and try and assist? I think the community digitalization has been talked of a lot. It's a pilot we are doing in Tembisa and Hammanskraal. Again, you can see that there is a need, but the environment on its own, people have so many fears. They don't understand. Even businesses, we saw there are some businesses with point of sale devices, but some do not use them because the communities are saying, if you're going to charge 1 rand extra because you have a POS, I'll still go to Mr. Mkhize where I can buy bread for 12 Rand, not 13 Rand. So they have a lot of things that they're still battling with, and that is one of the projects that we are working with. The taxi industry, people use cash on a daily basis to take taxis. So how do we start engaging those stakeholders to bring them on board? So those are some of the very exciting, we are very excited with those projects. We do ask ourselves sometimes if we're being brave, naive, but I think with the work that we're trying to do to have more impact on the ground, those are some of the bold moves that we had to take to say, let's move away from having boardroom meetings with the SARB and the MT, as well as go to the communities where they are so that we can get real information that then feeds into what we do next. So those are some of the things that I wanted to highlight. I won't take too much time. I think the problem of fragmentation has been dealt with a lot. The issues of lack of collaboration have been dealt with a lot. They are taking us backwards. And unfortunately, there are people who are bearing the brunt of us taking forever to do what we've been saying we are going to do. It's been years of us saying, we can't do this alone. We need to partner. What is preventing us from partnering? What is it that we are, afraid of? What is it? What is preventing us from taking those bold moves and targets and start working on the things? Is it competition? I also want to count things. I also want to report on this. There are things that we really need to look into. But we are open. I think my role was really to say there is work that is happening. There's a lot of work that is happening. We are open to partnerships. We are not an organization that is hogging projects. We are a market facilitator, and we're very happy when stakeholders come on board and say, we are here to work with you so that we can take this thing forward and scale it, because we are doing small pilots, but they need to be scaled up, and we need partnerships for that. So lastly, I think I just want to continue, because my job was to thank people. I've thanked the panelists. I have thanked the FinScope team as well as the syndicate members. I also have to thank the internal team at Finmark Trust, the comms team, everyone that is making this possible. I also have to thank the participants that are attending, that are with us online. Thank you, thank you for your patience. We've taken more time, but we really appreciate you coming in and participating in this. We will be sending the presentation deck as well as the recording so that you can continue, to engage the material, and hopefully it will help you, take a step forward now and say, what is it that you can do where you are at, and what is it your organization that can contribute in solving these issues. We thank you very much for your participation. Enjoy the rest of your day. Thank you.
Thank you very much.